Robert, a mixed bag of data this week. Let's start with the positive, and that's retail sales. What can you tell us?
Yeah, Susan, we got a better than expected number for June, up 0.4, and that goes right into consumer spending for Q2. So that's a nice supportive number for Q2 GDP.
How about industrial production?
Headline industrial production was flat, but when we look at the details, the manufacturing sector showed a gain of 0.4 for the month, and that's nice to see that because that's been sliding a bit. The high point in manufacturing output was last December, and we've been on a downtrend since then. So nice to see a positive number for June.
Now, how about some negative news? The leading economic index. What do we know about that for this week?
Yeah, down 0.3 for June. That's a soft number. It's a worst number in a couple of years, so we have to take that seriously. I'm not hitting the panic button yet. We'd like to, in order to do that, we need to see about 3 or 4 consecutive months of decline. So this is just down once. It could come back next month, but definitely a warning shot here that we have to pay attention to.
All right, let's move on to what's happening with the Fed. We've been discussing whether or not rates will go down. Where do you stand at this point?
Yeah, we had some miscommunication by the Fed. They're coming to the end of their communication period before the blackout and in front of their upcoming FOMC meeting. So the Fed speak we got at the end of this week and are getting is very, very important. And it looks like New York Fed President John Williams was misquoted or taken out of context in something he said yesterday that markets interpreted as very, very dovish, implying an aggressive down move from the Fed. I don't think that's going to happen. The Fed has walked that back, so we're still expecting to see a 25 basis point rate cut here at the end of July.